Welcome everyone to the February 2024 Talga Group quarterly investor webinar. Today we'll hear a presentation from Talga's Managing Director Mark Thompson about the group's recent updates. Following Mark's presentation, there will be a Q&A. Thank you to everyone who submitted a question ahead of time. You can also submit a question during the presentation through the Q&A function on Zoom. We have received quite a few questions, so if we don't get to your question, feel free to get in contact with us after the webinar at info@talgagroup.com. I now welcome Mark Thompson, Managing Director of Talga Group. Mark, over to you.
Thanks, Alex, and hi everyone. Thanks for joining either now or watching this recorded later. Let's get stuck into what has obviously been a very concerning quarter in some ways when it comes to the macro market, and I'll update you though on the realities of our side of things, which are frankly very, very good. Welcome to this is a conference room in our office in Stockholm. No, I'm not up here for a conference. I'm actually, we have car companies here, we have customers here, there are politicians here, and policymakers up from Europe. So we're doing a whole bunch of things in Sweden this week. And so taking the opportunity to have a different background, which is hopefully very nice. I think one thing that the outside world has not been reminded much of is that we're not actually a one project company. We're actually developing a whole range of battery materials. There's a diversity to our products across different technologies and different markets. So these are all being developed in parallel. Of course, our main project is the initial project is Vittangi, which is a mine to battery project here in North Sweden, which is drawing very close. But do not forget, we are exposing ourselves to many other parts of the market as well that is growing in electrification. And that is not changing. The growth rates may change a little bit up and down, but overall, of course, it is still growing really, really strongly. So just a reminder that your company, if you're a Talga shareholder, your company is not just about a single project. It's created a lot of value that is probably on the verge of coming out in various ways. But let's get stuck into the issues that are affecting not only our share price, but just the markets generally right now. It's very interesting to see a lot of negative market sentiment driven by media hype and lithium, lithium pricing, which has suddenly now become a proxy for the entire EV industry. Very, very strange, as the data shows growth of only 32% year on year. So I like being in a market where it's only just starting to grow and it's growing at 32% per year. Maybe it's down from 44% last year. Maybe in future it'll be 10%. But remember, it's year on year growth. So the actual numbers of EVs driving that are very, very strong. And of course, the battery demand is also related to ESS or stationary storage markets, the increased use of drones, the higher demands of computing power, AI being put into your phones and laptops and other things now also are actually very energy intensive and need high quality batteries and more energy dense batteries. So the battery market is still growing massively strongly, and it doesn't just come to some end within a few months and now nothing happens or something. So it's very, very strange to me. The bottom line is you've got the biggest volume of batteries at the moment is going to EVs, and they continue to grow strongly and did grow through 23, which was supposed to be a recession. And you're coming off 10 years of free money with the lowest interest rates in history, and you change those interest rates a little bit and you get this massive flight of liquidity, leaving the equity markets, and yet the actual capital, the market for the products itself continues to grow super strongly, and will continue to do so, which is why we're in it. The graphite prices have stabilized. They got dumped on very hard during 23 over production from China, and prices are now rising. And there's also a bit of wouldn't say it's a bifurcation, but the issues with shipping in the Red Sea and should we say a normalization of things compared to the dumping of graphite into Europe has meant that prices in Europe are actually getting substantially higher than in other markets. But the big thing was in the last quarter was the news that the Chinese were looking at export restrictions, or were developing export restrictions from December 1. So that news was announced in October. The day after it was announced, I had to fly to a different country every single day meeting automakers. And for the first time, we're seeing auto OEMs much more interested in anode supply chains than the cell makers ever were. Most of the cell makers are from Asia, no matter where they operate in the world, whether it's North America or here. And their supply chains, they're quite happily doing things. If they are forced by local regulations or tariffs on imports or regulations on ESG, they will comply with them eventually. But what this news from China did was the end users realized that they were much more exposed than they thought. It wasn't the fact that China have exported restrictions to zero. It's just that they suddenly realized that, particularly on the graphite side, they hadn't been paying attention to it and they had to do something about it strategically. So now we're inundated with site visits and interest from not just within Europe, but America as well. And it's to be honest, it's been fantastic for business. Some technical points behind that. I think Chinese exports of natural flake graphite were about 17,000 tons in October, which was about the average to that point, growing but average. After the news of the export restrictions came out, that nearly quadrupled to over 45,000 tons in November as people dashed to stockpile. By December, when the new rules came in, the December numbers are out and the exports have dropped to 3,000 tons. So while this has been published in some places a 90% drop in exports from China, which would be enough to put the wind up many consumers of batteries in the automotive space, the reality is it did drop from 17 to 3,000, showing there is an effect. Now, we don't know what the effect is long term. We don't know how that game's going to be played, but strategically, it essentially did a lot of heavy lifting that we've been talking to these customers about for a long time. And now they've got an accelerated attitude towards these things. So the localization of supply chains is no longer theoretical. The increase in deglobalization, the much harsher geopolitical landscape, no one's seeing that it's going to go back to, it's not going back to the way it was before, where you could import disinflation from China. Everyone is realizing that if you don't have your own thing, you possibly will come to an end. Now, I might be belaboring this, but I know you guys, this is very important. If you look at what happened, this is not the solar panel industry, right? When the solar panels came around the world and you had even government subsidized efforts to create solar panel production locally, in the end, they couldn't do it competitively with China. And now today it's nearly 100%, in China. There's some exceptions. And no one talks about it. No one seems to worry about it. They're just happy to buy cheap solar panels. How is the electric car market any different, or the battery market? Well, the difference is you've already got millions of people employed in the industry, and they've been going for 100 years in these countries like Germany, like France. So they've already got a lot more to protect. They've got hundreds of millions to billions of dollars of debt in pension fund payments for all these workers. They've got just a much higher level of investment already there. They're trying to protect. And so it's a different motivation. Otherwise, you could just say, sure, cheap BYDs, come on in and whatever. But there really is a fight that they're looking at having to support their industries. Now, whether that's through tariffs and going against their free trade principles, whether it's through increasing subsidies to local providers, either way, it's supportive of what Talga's doing, which is setting up a non-Asian replacement of Asian battery supply chains. So whether it comes to graphite, natural graphite mining, or even working on recycling, trying to decrease the amount of synthetic, it's ESG compliant, it's local. It doesn't have shipping demands. You can drive down the road and hand it over to your customer without touching a ship. That's what our project and that's what the company is doing here, is setting up operations to essentially replace an Asian, now currently 100% Asian supply chain into Europe and potentially, into America. So for us internally, to be honest, business has never been better. The fundamentals of the interest from where the customers are at has expanded from cell making, which is batteries, for those of you that don't know, is the cells inside the battery, and then going beyond to the autos and the final customers who were frankly happy to just let the cell makers do whatever they want. And now actually strategically, the auto OEMs are much more concerned about it now. And so it's like what happened in some of the other battery metals 3 or 4 or 5 years ago. Sorry, I should probably speak to all this in question time, but so if I head things off too much, I'm sorry, but it seems topical. So there's a bit of an intro to the last quarter. Our project is still very exciting in a global sense. 40 million tons of just under 24% natural graphite that is road and rail to customers. Don't forget, we currently have plans to expand production to 100,000 tons of anode. That's under a scoping study for the Niska deposits. So Vitengi's broken up into sort of, well, it's got two parts: the Nunasvara South, which is the subject of the DFS and the other studies that we're, and the financing and the project development we're doing. That's based on 2 million tons out of the 35 million tons that we have defined to date, still open. It's the largest defined graphite resource in Europe and one of the highest grade in the world. But more importantly, it produces more anode per ton of ore than anything else that we can see. That's called anode yield. So we're talking about, we don't care about making industrial graphite. We care about making material for batteries, and this produces more battery anode than anyone else, well, as far as I know, any other natural deposit on Earth, because of its unique characteristics combined with our processing tech that captures nearly all of it. So anyway, that was always the fundamentals, and they remain intact. So where are we at? Let's have a little update. Well, first of all, we're proud to have completed the early site works on the refinery site. So it's fully permitted. We've bought the land. We've started developing it and doing all the preliminary site works in preparation for FID and the full scale construction finance. The environmental bonds for that and for the mine have been secured. We continue to add partners like Sweco in engineering. Reyes have also joined us as a digital development partner. They're alongside groups like ABB and Worley. They're all playing a role in the development of this. The EIB, the European Investment Bank, has cornerstoned the debt target that we're after with 150 million euro approval, and we have finalised the other debt and export credit agency groups as part of the package. Customer offtakes, some of them have already been advanced as far as they can go, and they're waiting on some of the things around the project. And new ones are continuously underway. So the customers that you have visibility on are not the only customers, that's for sure. There's a whole heap, and that's accelerating after these recent events, as I described. The mine environmental permit, which was granted. So the environmental permit, don't forget, was granted in April last year. Then it's got 2 layers of appeals progress it can go through. It's in the last of the second and final part of that process. And while we had hoped that would come in before Christmas, then you have Christmas, which means it's hard to get something by the end of January. Obviously, it hasn't happened yet, but it's getting very, very close. We have reason to be confident that it is, nearby. We don't get official, detailed information really before the announcement is made publicly. Certainly, from working with policymakers and local politicians and people within government here, everyone is both confident and at the same time fingers crossed. However, bear in mind that whatever happens there is not like the final part of that. So if the approval, if the permits are, if the appeals are rejected, that is actually the final stage for that. There is nowhere else for anyone to go. And the permit goes from, it's currently granted, but it then goes into force, meaning you can do groundworks. If it were not to be granted, then actually all it means is it goes back down to be retried in the environmental court. So basically all the same issues that we already got approvals for would simply be reheard again. The process would be a lot shorter. And in the meantime, we would be applying for an execution order so that we can actually start on the project anyway, which under those circumstances, you would feel more confident about getting. But there's various options there. So it's maybe not as binary. And look, this is the normal process here. This is, it's pretty much every single project will go through this. And it's long and it's extensive, but the beauty of it is once you are there, as you can see behind me, you can actually do things and you can be operating here for 100 years. And things here are very, very successful from a mining point of view. The productivity of mines per unit of energy, the things that you can mine here are profitably, and the logistics that exist here, the tax regime that's here. There's the roads, the rail, everything is already set up for you. It's all high quality logistics. You don't need to set up camps. You don't need to shift villages of people. The point is, when you are set up here, this is a very high quality asset for a long time, and it's very, very close now, and we've been proving that for a long time. So it's a pretty exciting time. What's happening on finance, I hear you ask? Well, we have always we've stated our target for about 60% debt funding and 40% equity for a long time now. And what people probably, particularly research analysts, have to do is they say, well, I don't know what the 40% equity is, but I guess you're going to issue shares for it, and that's going to be hundreds and hundreds of millions of dollars. And of course, we're saying, no, that's not the case. We have a whole range of options in that. For example, there are EU and different member state grants and state aid available. Now, you would think we would be applying for these, and we are. But unlike the American system where you can talk about it from the beginning, in Europe, you actually can't talk about them until the end. So when they're fully approved and granted, but during the process, you're not allowed to say how much you've applied for and who with and things like that. It's just the way things are done here until things are fully approved. But yeah, we've got pretty good chances of, you would imagine, we're a critical mineral. The Critical Raw Materials Act has just come out. It's going into force in the next few months. As part of that, they designate strategic projects for Europe, which can also facilitate access to various funds around. So essentially, if you look at our package, the equity component of financing the project can be broken down into as much aid as you can get from somewhere else. There's Australian companies you're all very familiar with. They get up to $200 million in some sort of aid from either the Australian or the US government, Department of Defense, what have you. Well, we haven't done that yet. You haven't heard us because you can't talk about it until it's finished, until it's done. But of course, those things are underway with us to decrease any other funding requirement we need on the equity side. And then what's left? Well, you've got two things to do there. Number one is you could pay for it yourself if the shares are $5 and it's not going to hurt you too much in the company's dilution. But times are not like that. So what you do is you look at strategic partners. Well, what does that mean? Prepayments for offtakes, strategic investment, either not necessarily into the company, but into the project by a player or an actor that can help continue to decrease your funding requirements going forward. So I think when times are times are tough and you get squeezed a little bit, that's okay. We are asset rich. We have many things to sell and work with various partners. And it's not even just in the project, it is other parts of the business as well. The lithium discoveries, the cobalt deposits, 250 million tons of iron ore and resources, copper projects, and including resources. And then, of course, silicon and other battery technologies that separately can also attract state aid and strategic investors, and whose money could be essentially paying for the parts of the company that form part of that equity. Anyway, this is maybe an overly detailed view for retail as such, but just to point out, we don't sit around in corporate land thinking about just dashing shares away. We've been a public company for 14 years now. We've got relatively few shares. We've got about 350, 360 million shares out there. And as you can tell, when times are good, we raise capital carefully, and when times are bad, we raise less capital. And right now we're in really good shape because of the capital raised from last year. And we're really under no pressure. We have options and time now to change the outlook for this. So anyway, the point is there's a whole bunch of solutions. It isn't that we're going to issue $250 million of shares of equity and all that stuff. Obviously, it's not in our interest to do so, so we don't do it. So anyway, talk about key finance partners. We can talk about this more in question time, I guess. Industry partnerships are increasing. The Polestar Zero project is interesting. On Saturday here in Sweden, Polestar will be doing a global reveal of their Polestar 4, which is their SUV, their next bigger one. Interestingly, in the street the other day, I tweeted out a picture from their showroom here, but also there's a showroom for Zeekr, and of course there's showrooms for Volvo. All three of those brands are made by Geely. Quite nice batteries actually in some of them, NCMs, not LFP, quite interesting. So the Zeekrs are like the zippy high performance ones, etc. Anyway, I'm just sort of saying that even when you see a brand, you don't necessarily know the relationships of the battery makers behind it, and the platform is usually larger than what you're seeing. So it's quite interesting up here, particularly in Sweden, for example, the commercial vehicles of Scania and Volvo and groups like that, they are actually building their products here. The passenger cars are being built either in China or in Thailand or somewhere else, and it's maybe a Chinese-owned platform. And this is the things that are swilling around in the world. So when you see a relationship between us and someone else in some way, and it may look like one single thing, but in reality, behind the scenes, we're usually talking to them about entire platforms, suppliers across entire continents. So yeah, it's pretty exciting. There's still research developments going on, not only with our products, but spreading them into other facilities, I guess, where we can get co-funding in particular. So hundreds of thousands of dollars of support per project, usually co-funding things either in the UK or somewhere else in Europe. And of course, we always diversify our product range with things that can apply to what some of the customers, where they're going. So if someone says, "Oh, we're getting into sodium-ion technology because you don't need graphite, you don't need this," and in reality, actually, their hard carbon anode needs a conductive additive, otherwise it doesn't really work. Well, guess who makes a conductive additive? You read about some company getting into solid state like Toyota, and the press reads, solid state batteries are made without graphite, so you don't have to mine anything or dig anything. But of course, they don't actually work with lithium metal, and in fact, Toyota's solid state researchers have published that they use a graphite-based anode for that. So someone that actually knew how to make anodes for solid state batteries that were combinations of graphite, silicon, and other things would be well placed for these things. So we basically try and have a product range that is diversified into technologies, not because we're worried about one thing replacing another, but it increases the business. Some of these new technologies, as they come on, they're small volumes, but really good money, or more expensive. Plus, it helps the engagement with different levels of the industry partners. Okay, so just saying, it's not a mining company. We've strengthened the EU team. It was great to catch up with our team in these weeks. I've been over here in Europe on this trip. Anna Motta is now our group CTO and has got a fantastic background and leads our team now across Europe or across the world, really. Also, we're very, very thrilled to have Per Inge join us. He's ex-Ricardo and FEV, automotive industry guy. He's now heading up business development and strategic alliances, and he's ripping into that at a rate of knots, I can tell you. So we've been on the road together already, and we're hitting the road again this weekend for a very exciting trip to some customers while here. And Eva Nordmark has been a fantastic appointment, caught up with her yesterday. She's appointed to our local board of directors, former minister for Labor, and very well connected and very, very supportive and interested in helping the nation building part of what we're doing and the environmental cleanup part of what we're doing. So yeah, she's really motivated as well. We are continuing to look at improving the structure of the company all the time, but more importantly, just putting the best skills in the right places. And we're also attracting not only new talent, we're increasing. I guess it'd be fair to say that we have accomplished a lot over the last year on the finance and the permitting, the commercial side. Now we are expanding, and also other parts of the business that are needed to execute the project. So that's all getting strengthened, which is great. We still explore. Sometimes people say, well, don't you have enough graphite? Well, yeah, we haven't actually officially turned all this stuff into reserves, which you could do if you want to spend money on it. But frankly, it doesn't really make any difference to the world of the customers right now when you can already provide them what they want from what you've already defined. But we still are very interested in making plans for the future. You sort of have to, because you have to think so far ahead, not only with the permitting process, but bear in mind that once we actually have our non-Sahara South permit fully complete, then we can look at ways to optimize and increase production from that in some ways. So we're looking at options for that. We're also looking at options how to upgrade the NISCA and the way the whole project can work going forward to optimize it. Rather than just being like a production target, we're looking at how we can optimize it for everyone else. The lithium project is quite exciting. We just announced in the quarterly that we've doubled the size of the project. It's now over 270 kilometers square. But more importantly, we've discovered a lot more pegmatites, outcrops, and identified pegmatites that are possibly related to the lithium-bearing ones we've found already. The point of the lithium project now is that it's about leverage, right? Could be worth nothing, but if it works, it could be really, really big. We are seeking and currently in negotiations and discussions with more than several parties about coming in on it as partners to help us with the heavy lifting on it. But it is exciting just because it's so leveraged right now. There's zero value for that. Now, obviously, the lithium market right now, everyone's pulling their hair out and very concerned about it. But long term, what are you going to do? You currently import 100% of your lithium basically into the entire continent of Europe with over 1 billion people, and nearly half of them are on their way to having cars and a battery dominant transport industry across trucks and even planes as well as trains. They're very devoted to it. It's happening whether you like it or not, or whether you have a different opinion of when, where, how. It is underway and happening. You're having a de-oil event start, and it's only just starting, and it's getting bigger. And short-term media things and sentiment aren't changing the fundamentals of decarbonisation over here. So having what could potentially be a very large hard rock lithium deposit on hydropower and clean power with great logistics and accessibility, with very low power costs and great, as I said, access to markets, that would be a very valuable thing. There are some other hard rock deposits, of course, being explored and attempted to be developed in Europe, but these rocks are actually pretty big. So may not, it's an exploration project. Chance of success, frankly, is very, very low. However, the leverage to, if it does work, is so impressively big. It's worth a little bit of effort. So that's progressing. We're going to now back off on some of the basically a lot of discretionary expenditure, including some exploration, can wait another 6 months to see how things pan out. But more importantly, we've found so many more pegmatites. Before we go drilling in one place, it'd be better if we actually developed more of the targets and brought them up to where they can just be drilled in one section, and the demob of the driller and everything else. It makes everything cheaper to do. And of course, we drilled recently a Vittangi number 6. Why? Well, frankly, no one knew what it was. You have this giant, massive conductive stuff in the ground. It's 6 kilometers long. We've run around with surveys and defined it. You get conductors 300 meters wide, strong conductors, but no one really knew what it was. It was probably graphite, but no one actually knew. Could have been something else. Could have been sulfides. And the tenement's getting on, and you want to do something about it at some stage. So when we had a chance, we nipped out there and just did 5 holes, essentially to find out what it was, to check it was graphite or not. And we got very broad intersections proving, indeed, it is graphite. Grades a lot lower than Vittangi. It looks similar stuff, but sort of more primitive. It's like it's missed some sort of physiochemical upgrade, but very, very interesting. Giant volume of material there, obviously, but the conductor is proven to be caused by the graphite. And the graphite, we're getting intersections of over 200 meters at about like 4%, which is all grade of other people's deposits in other countries. But grades get up to about 14%. But we drilled, I don't know, 10 meters of strike, about 100 meters, 200 meters wide in one place. It was really just like a rock chip sampling program because there was no outcrop. You just didn't know what it was. So we've not only quickly and cheaply confirmed what that conductor is, which is a very, very large target, and gives you maybe some optionality sometime down the road when the time is right to go and drill it out and add that to the inventory and add it to the plans for expansion in future. So I've been successful at that. On the product side, it's hard for us to reveal much detail about silicon because of the nature of the equipment and the process itself. That you don't want to just show everyone everything, but it's at a very, very advanced stage. Feasibility work, engineering work, Worley and other groups that have been involved in that. It's at a very, very advanced stage. We just don't want to bring too much out on it until the customers are also there at the same time as the finance is there as well, so that you know what the whole package is, and it's not just a plan that adds to other things to do, so that you can actually see the wonderful metrics, the financial profitability, and the sort of money is looking at it an investment and who's involved and the validation of all of that. The product itself is interesting. Silicon's been getting a lot of talk up in the media again lately, and you see claims all the way up to like 100% silicon, etc. What we do is we make a 50% silicon product, and the beauty of it is it's a drop-in additive. What does that mean? It means you do not have to change your currently existing battery factory to deal with it. It doesn't involve gases and liquids and stuff you don't know about. It's just a powder. You mix it with your graphite, and you can just put it in whatever you want. Now, the point is it's very hard to make the silicon product in a way that it doesn't break down. To do that is usually very expensive. So ours is inexpensive, massively scalable. We've been, shall we say, de-Asianing the inputs for it. So things like everything from binders to silicon, everything is done within Europe now. And it's, from what we can tell from looking at benchmarking of currently sold Chinese products from groups like BTR and others, it's very, very competitive, both in performance and in cost. And it's got some very, very positive metrics around it as not just a project, but a continued growth area for the company. So yeah, when it's advanced to the point where we've confirmed exactly how the other parts will work, we will go into more detail on that. But it's quite mature actually right now, ready for scaling up further. Conductive additives, what are they and why? Well, interestingly, during all this processing of these materials that we do, you can generate sometimes some fines, or you could choose to scalp off a certain scale of graphite particle, and you can engineer it then to be a conductive additive, which is essentially a magic black powder that you sprinkle into other things to boost the conductivity. It's that simple. Currently, that job is done by carbon black. Why? Because that's an amorphous product, not crystalline for graphite. Why does it work? Well, it's actually because it's super small. Now, the smaller you want to make a particle, normally the more expensive it is. The problem with carbon black is it's easy to make a small particle because carbon black is soot. If you get a candle, and hold your hand over, hands down the black stuff, or an acetylene torch when you're welding, that's carbon black. So the particles are very, very small, and they didn't really cost that much to produce. The problem is, as you just heard, welding, fire, whatever, it's actually bad CO2-wise. It's nasty stuff to produce. So for us, it can be relatively cheap, big volume, expands our market from the anode across into the cathode, because these products are currently used in cathodes, can be used in sodium-ion batteries, can be used in solid-state batteries, all over the place. It's been proven at lab scale. It's heading on to upscale in demonstrators. It's been tested by all the way up to major automotive groups who got very positive results for it. And we hope to do some deals on this later. Companies in Europe that currently make this very successfully is Imerys. So you can go and look up Imerys's website and find their conductive additives materials, and you can see how they go, and then you can try and work out how profitable they are. But it certainly looks pretty good. So, and probably quite exciting developments lately on recycling. Recycled graphite. A lot of people that recycle generate black mass from recycling batteries. They don't know what to do with the graphite. It's currently been going to landfill because it's now, shall we say, infested, or it's got lots of metallic compounds and contaminants if it's a used battery. Now, if it's production scrap, it's okay. It's clean. It hasn't been used. It's not difficult to recycle battery parts that haven't been used because they've already been purified to 99.99%. They're sitting there and nothing ever happened to them. So you can just literally wash them off with water and try and recover them and try and reuse them. Maybe not in a battery, but something else. But you could reuse them in a battery. So, but mostly used batteries are going to be the big volume going forward. Now, Talga's process technology for our Talnode C has a purification step. In that purification step, we have proprietary technology that we've been trialing with some success on recycled materials. Now, we have announced some of this, that the recycled graphite can be used as a structural form in a silicon anode, but we're also doing some work on can it actually replace synthetic anode coming from Asia and be mixed with natural to have a lower CO2, greater circularity. So you've reduced your raw material dependence, you've made a greener product, and you're starting to wean yourself off more, obviously, from these dirty oil and coal-based products. So keep an eye out for some news on that. And I'll just finish with graphene. We have done some of the largest graphene applications in the world. We were really pioneers. Almost everything you read about in graphene in concrete or graphene in paint or graphene in batteries or anything, we probably did that about 5 years ago. and in the background have been working quietly with certain customers, continuing to develop these products to where they can go commercial, which is getting pretty close. There are sales. We do actually generate some small, insignificant amounts of income at the moment, but there have been some breakthroughs that we look forward to telling you about with certain customers that, it's pretty exciting actually what can happen with that. The beauty of it is our graphene production methods now are actually linked into the battery material, so it's like a value add. So you can take some of those things, and of course we have quite a lot of range of products there. So let's wrap up, get into questions. Sorry if I've gone too long. Finalisation of permit, that's upcoming as soon as can be. Financing, then that also allows the finalisation of the finance and the offtakes basically for it. Plus we're looking at offtakes for other products like on the silicon to underwrite those things as well. We also have got obviously a bigger focus on strategic partners now and government funding. So both of those things, will be coming up as well. And at that, I've probably nearly gone over time. So change in shareholder structure, we can probably talk to in question time. Actually, one of our major shareholders has been purchasing a bit. So Pentwater is now actually our number one. I'm number two. Uni Super now shows up as number three. That was previously what was labelled as Kinetic here. Yandal Investments is Mr. Mark Creasy, owner of many beautiful graphite objects from this project, and Ellison Capital. So institutional investors now forming three of those top 5 shareholders in Talga at the moment. Market cap's 230 million Australian. We've got 33 million in cash, and research underway from a lot of great brokers, companies, and analysts, who I think their average price is maybe up around $2.50 for the company at the moment. And obviously we'll talk in question time about share price, things like that. So with that, Alex, I'd better hand it back to you and any questions whatever we have time for.
Great. Thanks, Mark, for the presentation and updating everyone on the group's activities. So as you say, we're now going to move to the Q&A portion of today's session. So once again, thank you to everyone who has submitted a question ahead of time or through the Q&A function on Zoom. Mark, can you explain the recent reduction in the share price?
Can I have a drink, please? Can you explain it? I think that up until probably mid last year, we were actually quite a good boat. We were actually outperforming most of our peers and the sector in general. I think for a few months last year, we were actually the largest value by market cap of any graphite-related sort of Western company listed. Then the whole market turned really, really quite badly. And at the same time as that happened, there were some, obviously that's at a time when some professional investors and funds and things can get into a bit of trouble, and that can lead to a bit more selling. But the bottom line is the entire sector has been smashed along with the lithium price. The lithium price smashed all the lithium guys, and it just caused this bad sentiment about battery materials, and that's flooded over not only into graphite, but nickel, copper, you name it. The entire mineral resource sector has actually just undergone or is now currently in one of the worst crashes I've ever seen. You go back to the late 90s, 99, coming off the bottom there, the GFC, 2012, absolutely abysmal. There's been some pretty bad times, and we seem to be undergoing something like that now. So it's really hasn't really been because Talga had failed to do something. Obviously, everyone would like more offtakes, more commercial things. You want to feel better about the validation of the product. But they're all feeling things, right? The logical steps of all those things are actually all underway. We keep you informed as we can. We didn't really try and do something and fail or announce some big change of a plan. We're sort of doing what, everything is proceeding as normal. The market sort of happened to us. So anyway, the bottom line is we're not alone. We're probably now then because it hadn't happened to us, it happened with the other companies earlier in the year or in the previous years. They'd already gotten smashed. So then it made us look really bad because the smashing to us happened quite late. And so ours was quite harsh as well, quite at the end. Where we're at today is probably about mid-pack, I guess, in performance. These are all just short-term metrics. But yeah, it's just a market sentiment-driven thing, which seemed to be triggered from lithium lithium prices coming off historic highs. And what did everyone think was going to happen? Interestingly, now Chinese companies are doing offtakes where they're doubling their volume requirements and things like that. It does remind me very much of the iron ore market back when that crashed from 100, when prices got to 150, 200 bucks a ton for iron ore a few years back, and then it crashed down to 40, and everyone went broke except like BHP, Rio, FMG barely survived. And everyone said, oh, that was over. Yep. Even though there's 1,000 million tons a year of steel, I guess the market's going to shrink and everything's everything's going to go back to the 70s. No, today iron ore's 150 again. It was just a short-term thing. Lots of deals were done. Then the prices renormalized. So yeah, we've just been caught up in a spectacular, one of the most spectacular resource downturns I've ever seen, all driven by sentiment and worry about future growth prospects for things like EVs and the China economy and things like that. So, sorry, that's my personal feelings about it. Don't think there's much more to say there. That might come out with other questions.
Oh, thanks. Is the share price a threat to Talga's viability to develop and progress the business?
No, it may change your approach. It may change the way you look at wanting to develop and build certain, like the finance package, as I said earlier, about looking at. So maybe your strategic partner now is going to have to do more heavy lifting, and you are going to definitely need one. If the share price was at $5, it's optional. You'd say, I don't need to sell anything to that guy. So no, it just makes it more important, but it is not a threat at all, actually. It's I'm not saying like it. Who doesn't like it? Hey, I'm one of the biggest shareholders. I've got bigger margin loans on this company than you guys, plus 14 years of my life, about 3 mortgages. I'm working on more, probably on more losses and exposure here than anyone. And but I can tell you, I'm perfectly comfortable with it over time. And all it does is it changes your maybe your view or your importance to the way you sort of finish some of those parts of the project, but it doesn't represent a threat to it, no.
Thanks, Mark. I had a question about the 500 million EIT, Energy Battery Materials Fund that was recently announced. Will this fund benefit Talga?
We've known EIT for a long time. Just to be clear, it's not actually like an EU fund of money or free money or that sort of thing. So what I would say is that it may not be something we actually want to do or get involved with, but for various reasons. But what it does is it represents a growing pool of funds that are building for green critical raw material type projects in Europe. So InfraVia has another one. I shouldn't say because I don't know if it's public, but at the conference, a lot of people were talking in public about that they had raised a similar amount for investment in projects. And I know that's just the tip of the iceberg of things that are getting developed right now. There's an ecosystem here of this stuff because the car companies are involved with the workers, the environment, the economy of these countries is heavily tied into this network. They're also being funded by banks. The banks are then financing battery production companies and startups. And the bit that was missing was, well, what's in the factory? Is it going to be Chinese or is it going to come from Europe? Like, where does it come from? So that's the bit that was missing, and that's the bit that they're now looking at. So the EIT fund and others are actually growing. So, and I guess in not retaliation, but there's a lot of things underway to try and get competitive now with the US IRA funding that's been very successful over there, and also a whole general fixing up or stalwarting of their industry in this sort of deglobalization and the broken supply chains that are starting to arise that they've been used to. So yeah, it's a sign of positivity, but no, I'm not saying we specifically are going to be involved with that one.
Okay, great, thanks. The recent ruling from the US FEOC board, that is Foreign Entity of Concern, is favorable to ex-China producers such as Talga. Has this positively affected negotiations or discussions with customers?
Yes.
Great.
There's much more I can say. We obviously we're quite interested in whether we should have a US facing strategy, but it's a little bit complicated because some of the companies there produce things here in Europe and they may be exported there, or they're happy to get the sales here. There's a lot of cross-linking going on also politically. There's been the White House and the European Union have announced various strategies and things they're working on together. So it may be that you do not need to sell within the US. It could be a European product. So the bottom line is, though, that if you are, yes, in a place like Sweden or somewhere else in Europe, the ability to potentially sell into North American consumers or markets to fit in with the IRA and get benefit from the IRA type support, that probably already exists or is about to exist in Europe anyway. So yeah, look, it's supportive, and that's why I had to be blunt about the question. Well, is it better? Yes, it is. Good, excellent. The more people, the bottom line is the rest of the world has only just realised no graphite, no battery. You don't have any supply chain of your own, so your entire industry of automotive and decarbonisation and everything else you want to do entirely relies on that, and you do not have any production in all of America, North America, I should say, and you don't have it in Europe. So, yeah, if you want to build an anode supply chain outside of China, we're going to be one of the big players. Maybe not the only one, but we've got a big role to play, and it could be a hell of a lot bigger than it is now.
Great, thanks. Given the inflationary pressures over the recent months and years, are the assumptions in the DFS, for example, CapEx, etc., are these assumptions still realistic?
Yeah, good one. We I won't go for a totally binary answer here. We've been doing a lot of FEED, which is front-end engineering and design work. We continue finding optimizations throughout the project, both from a processing point of view, like the technology, which then has big effects on things like, for example, if we change some of the equipment in the plant or some part of the process flow sheet, if we have a small change, it can change the price of all the equipment we need to buy, but also have an impact on the energy requirement of the project. It can lower the energy, or you could look at having less HVACs, which is your air conditioning and temperature range, and it can affect your piping requirements and things like that. So we've been working actually very hard. The teams have been having a lot of success in finding these sorts of optimizations throughout the FEED process, so that we can remain as close to these original targets as we can. And I think we've been very successful at that.
Thanks. Have there been any technical advancements in the industry which may put Talga's business model at risk?
You'd have to quantify the risk. 50-50, 10%, 1%. So at risk. Is there risk? There's risk in everything, but no. You've got the outlook anode today, you're at, I don't know, you're sort of probably around 1 million tonnes a year of anode. It's heading for benchmarks, got it at, I think in 6 years' time, we've got to be 13 million tonnes of anode. Our plan is for 20. Our initial plant production is 20,000 tonnes, going to 100,000 tonnes. All those plants that are being built now, 99% of them use graphite anode. So that's fine as a basis. But you want to mix some silicon in there, where you're mixing 5-10% silicon in there. Is there a technology that, say, can go to 100% silicon? Well, some claim that they can, but you've got to be very careful about what their claims are. You might need to change the metal that you use for the electrode. You might need to change the thickness of everything, which means the rest of your process has to change. So these literally now trillions of dollars of investment around the world going into electrification are actually all based on a business model that we dovetail into. And as I said earlier, we've got a diversity of products. So if I'm wrong, and if we are wrong, and all our team is wrong, and all of our advisors and our customers are wrong, and it's like, oh, gee, silicon turned out to be a lot more bigger market than we thought, or something. Rah rah rah. It's like, okay, well, it's a good thing we've got a fantastic product in that range. And oh, gee, Mark wasn't keen on sodium ion because it weighs 3 times the weight versus lithium, and it's got really super low energy density. And if you have a crash in one, it releases cyanide gas, but no one talked about it. Okay, but if the sodium did take off, what you think the other billions, the 170 to $500 billion worth of investment in existing graphite anode battery plants, they can't change. You're talking about an entirely different methodology of making batteries. You know how many years it takes just to introduce a change of supplier for the graphite into the battery industry? That takes years. You really get your head around the creation of the reversal or takeover of the entire lithium-ion battery industry making things with graphite anodes. It's infeasible. Is it a risk? Yes. Have we mitigated the risk? Yes. Is it likely? No. So, you get where the strength is, and work with a company that isn't just a graphite miner trying to add some value on. We're actually a material technology company that works across all battery materials and can usually make them cleaner and cheaper than someone else. That's the company we actually are. We just happen to own our own graphite mine. We might own other mines and other sources of other materials that fit this in future. It's very early days. You haven't seen what we're capable of yet and what we've already built and the value add. But now we're at an advanced stage of certain things, getting financed and developed. It gives us actually some resources and capacity and some room to start focusing on the next stages of other products and stuff as well. So anyway, look, I know people freak out about technology, but as you can hear, if we could do a workshop for 6 or 7 hours and we could run through these other technologies, and then you can go away and research them. I invite everyone to Google whatever technology you're worried about, but put in the word problem and see what comes up. The problem with sodium ion, the problem with silicon, the problem with solid state, the problem with lithium air, the problem with lithium sulfur, the problem with lithium aluminum. Put in whatever you want. But look at problem, and you'll find research papers that label these problems and then suggest ways, to get around them. And almost all of them in the 5,000 word essay that they write will have one little line at the background that says, of course, the problem is this is very expensive. Or, of course, the problem is it's not possible to ship that metal legally anywhere in the world because of the fire risk. So all of these things have got problems that you're probably not aware of and certainly don't believe the media hype on. Come down and talk to our scientists, visit us somewhere else in the world. But get out and about more. I wouldn't rely on the internet too much.
Great, thanks. The full regulations for the battery passports in the European Union won't come into force for a few years. Given that, is there any indication that customers are willing to pay a green premium?
It's growing, yes. I would say probably a year ago, not so much. But now interaction with customers include not just the battery passport, but where that ends up doing. So it starts off as a guideline. It ends up specifying the amount of carbon you're allowed to have. Sound familiar? Trade wars, tariffs, but you don't want to be a tariff because you don't want to deal with the WTO. But you do have very high internal clean policies, and maybe someone from another country can't match that. So they want to come to your country and make it there. There's this continuous competition around fighting around these things. But what I can tell you is that based on what we've seen is customers are now much more aware of it. When I say automotive or downstream customers or Western cell makers. And what's interesting is particularly for automotive OEMs who frankly don't normally have much, right? They just assemble cars and market them. They don't build batteries, most of them. But now they're getting involved because they can see that the battery is going to have regulations that aren't necessarily going to be of interest to their cell battery maker. Battery makers coming over from Korea or Japan or Asia, mostly it's Chinese. And if they don't want to get on board early enough with these getting prepared for these regulations, then the auto customers are a bit antsy because their head is on the block for the penalties. You might remember, there's currently emissions targets. So there's a tailpipe emission target So that changed engine technology, or internal combustion engine technology. That entirely got changed because some companies had to pay $1 billion a year in penalties for not meeting the average CO2 content of their tailpipe emissions. So the regulations do drive the change, and that's what's coming up in batteries is if they don't want to be too nationalistic, the other way to get what they want is by increasing the standards. And yes, we're starting to see people. Now, will they pay a premium is the question. It's already starting to happen. A lot of the pricing you see is FOB China. FOB or CIF Europe prices are actually higher. In future, will there be higher transport costs? Could be. They seemingly are going up. Big delays in shipping represent more risk. Are they willing to pay more to have a local thing? So yeah, it's coming up. It's coming up a lot more often, and we expect, but we can't rely on it, right? We actually have to be capable of producing as cheap as China, as close as we can. But especially at the beginning of the projects, when you've got to pay back your capex and debt and stuff like that, you do need, it's good to have a bit of a lift, and it looks like that is evolving. So look, I would say that the answer is yes, and it's getting more imminent. It's getting quite close. They have to start now to test the materials, to have them qualified and ready for the 25 start of the regs, but by 28, they're having the equivalent of CO2 tailpipe emissions applied to batteries. So it's not just about telling people what CO2 there is. You have to make them at a certain CO2 level, and that's when it hits them in the face. But to be prepared for that, they actually have to start testing materials now, doing commercial deals and technology deals and supply chain deals that can mature over the next 1 to 2 years to be ready for that. So yeah, it's actually going to have a big effect, but they're sort of all being dragged kicking and screaming into it because they've been sucking that low-cost Chinese material for a long time now. It's pretty hard to win them off, but it's happening.
Okay, great. Thanks. Well, we've come to the end of our session, so we've only got time for one more question. Long-term Talga investors may recall seeing an image of a very significant sphere of natural graphite, or orb, as it was referred to in the question. That's almost as tall as yourself, Mark. It's a three-part question. What happened to it? Where is it? And can I touch it?
The great graphite ball, the 7-tonner. What happened to it? It's currently in storage, I believe, on its way to when its owner has a building that their engineers tell them they're allowed to put it in the foyer of the building where everyone can see it and touch it on their way into the building. That's my understanding. Now, there is an opportunity for you to touch a smaller version of our ball. But I'll be back in about a week or so. We're coming down. I'm back in Australia for enough time. I'm going to go to the Explorers Conference in February in Fremantle, RIU, and a whole bunch of other events. But at RIU, we're going to have a booth, and I'll be forcing our poor staff to drag a small version of the ball and the graphite car and some other stuff down there. So I invite you, if any shareholder can, get to Perth, wants to come and talk and check out a small version of the ball, then they can come there. And in future years, hopefully you could be invited to our shareholders' place and see the big ball to which you mentioned. But yeah, look forward to seeing people and having much, much longer conversations face-to-face there. I think we're going to be in Sydney and Melbourne over the next few months as well. Possibly benchmark up here in Sweden. I personally, only go these things when it fits with where we are. We're doing other things already. It's not, I don't go to conferences for conferences. But if we're in a town where they're underway and there's other people we want to speak to, sometimes we'll go. But the February in a couple of weeks' time is going to be a good place to go, and you can see the real thing, and you can have. I'm very willing to have very extensive talks about technology or any other part of the business. But thanks for your interest today. Sorry if I went on too long and we didn't get around to more questions. I don't know how much there is. Obviously, I'm looking out at Stockholm here today, so it's early. It was morning here, so we haven't maybe been able to screen stuff as much as or make it as long as we can. But I thank you very much, and thanks, Alex, for running it.
Thanks, Mark. And anyone who's interested in coming down to that conference, that is the RIU Explorers Conference from the 13th to the 15th of February at the Esplanade Hotel in Fremantle. Yep, so that's all we've got time for today. So thank you, Mark, for your presentation and time answering questions. And thank you, everyone, for attending. Keep an eye out for the next investor webinar. Thanks, everyone.